2015 off to a busy start. Meanwhile, for mergers, just this morning, LinkedIn acquiring Lynda.com for $1.5 billion. Societe Generale acquiring most futures activities from Jefferies Bank. The total value of deals already announced this year, more than $1 trillion, according to the Wall Street Journal. If the pace keeps up, we could see $3.7 trillion in deals. That would be the second highest level ever, according to S&P Capital IQ. Joining me right now is Bob Nardelli. He's former CEO of Chrysler and, of course, former CEO of Home Depot, longtime executive at General Electric. Bob, always wonderful to have you on the show.
Thank you. It's great to be with you.
What's your observation about all this deal flow going on?
Isn't it exciting?
It's really amazing.
You know, we were on together and we talked about last year's M&A activity. I think the dollar volume was up like 40%. Deals were up maybe 4%. And we were saying, can we ever have a repeat of that? We knew there were going to be a lot of carve-outs this year and a lot of the corporations leaning out. But, geez, what an exciting start, right? You look at what happened with Shell and, you know, my good friend Fred Smith over at FedEx and the ones you just announced this morning. I mean, it's off to a great start. Why? Well, you know, funds are available. They're relatively inexpensive. People are desperate for growth. You know, if you look at FedEx, could Fred have done that himself? Sure. But now he has been able to leapfrog some of the competition. He'll get tremendous productivity of synergies in the back room through a consolidation, and now he's there. So, you know, rather than spending 2 to 3 years to develop it, he's there, he's competing, and he'll get tremendous productivity.
Yeah, and then there's another element that's sort of the very 2015, and that is the strong dollar. We had Fred Smith on this week to talk about that deal. He acquired a shipping company in a Dutch shipping company, and he said one of the reasons was my dollar buys me more.
Absolutely.
And so you're seeing this cross-border activity.
Yeah, what's the lure, 2,400 to $1 now?
Exactly.
Let's go.
Yeah. Time for a trip to Rome.
Yes.
Yeah, but you know, the dollar is expected to continue strong, so you have to believe that U.S. companies have a lot more, you know, potential and wherewithal to actually acquire abroad.
Yes, there's no question. The strong dollar, you know, it's the bane and the boom, right? Some of the corporations are reporting softer earnings because of the impact where they haven't either hedged or they don't have a natural hedge against supply coming out of Asia to the U.S. market. So I think that'll be an important subject in a lot of boardrooms and for a lot of CEOs. How do they start hedging? How do they start balancing the trade? But certainly the strong dollar has a lot of benefits for acquisition abroad. I mean, if you look at Fred, for example, to be able to buy that TNT at these rates, at these exchange rates, is pretty darn favorable for him.
What about the oil story? Let's talk about that for a second. Energy has been the story of markets for the last couple of years now with that 50% sell-off. Yesterday, we see Shell acquired BG Group. We just had Fodelgate, an analyst at Oppenheimer, who said it was way expensive. He doesn't expect that kind of premium to be paid throughout energy, but are you expecting more deals in energy given the price drop that we've seen in oil?
I'm expecting it and I'm seeing it. A lot of corporations are now taking advantage. A lot of the infrastructure that has been idled right now because of lower prices. You know, you're able to pick this up now, Maria, on 50 cents on the dollar. A lot of fracking rigs are out there today. A lot of infrastructure. A lot of the service companies are available now for acquisition to be able to pull in that revenue for the recovery. Point one. Point two, I think this move to natural gas. You know, I'm a big zealot on energy and energy independence. So I think the move that Shell made is a very good move. I think we're going to see more natural gas. I think, you know, again, it'd be interesting to see if the president took an executive order and started allowing companies to export oil today. I think it's critically important that we keep that infrastructure up, that we keep those good-paying jobs in place, and we continue to work towards energy independence in this country.
This is something that came up when I was talking with the CEO of ConocoPhillips about the crude oil ban, the export ban that's in place. Everybody in the oil industry wants that lifted. And that was put in place so long ago, you have to question why it's still in place right now.
Yeah, I mean, even if you think about some of the comments that Rand Paul made the other day about using our natural resources that we've, you know, just recently discovered through innovation and technology on a geopolitical basis. You know, if we could make some commitment to Germany, right, about the ability to supply fuel, whether it be oil, natural gas, and give them some confidence and not being cut off. I mean, wouldn't that help us as a country gain, support from some of the global people that might be a little concerned about being cut off from natural resources.
Not to mention giving Germany an ability to sort of loosen the stranglehold that it has with Russia.
Yes, exactly.
And all of Europe, by the way, for that matter.
To me, that would be a great geopolitical activity for our president and some of the other global leaders to talk about.
You mentioned Rand Paul. His platforms has been very much economic. Talking about small government, talking about low taxes. I don't know about his audit the Fed platform. We can get to that. But is there anybody in the field right now that stands out to you that would be good for business, do you think?
Well,
in terms of the contenders that we know so far?
Yeah, it's a crowded field. On one side.
And Jeb Bush is getting much of the money.
And he's getting much, and he will. I think he will. And, he's got the strong Rolodex from his dad, his brother. I think he's got a lot of support out there. But what I'd be interested in is exactly that. We need a president that really understands business,
right,
that will be supportive of business, that will put policies in place that will support the growth of business. Maria, we need a stronger GDP. Mm-hmm. We can all talk about
back to growth.
Exactly.
In a sustained way.
And we can all talk about creating jobs, but you got to have a strong GDP that creates the opportunity to pull people through for jobs. So, a low, slow, you and I talked about this. Everybody was forecasting 3.2%. We're now down around 2.5%. I think it's going to be a low, slow year again, like last year.
And unfortunately, the best part of this recovery has been the corporate earnings side of it.
Yes.
And now earnings are actually really under pressure because of things that you thought were positive but really weren't, and that is the strong dollar.
Strong dollar. And if you look at the stock buyback that took place, right, for some of the larger companies, IBM, some of the others, if you take out the stock buyback, some of them had really negative earnings per share growth.
I will talk more about earnings because earnings is going to drive the activity on Wall Street now for the next couple of weeks. You've got the banks reporting next week. That's really going to be the story after we heard from Alcoa last night. Bob, stick around. Lots to talk about with you this morning. Let's go look at these markets because